All right, welcome everyone. Welcome to the Hurley Investments Market View Commentary for Monday the 13th, the middle of May. Let's see, I've got two things to go over today, but let's see here. First, over the last week with Meta, moving higher, I have had a ton of calls. And that's not a bad thing. As I was thinking about some of these calls, some were next steps, some were let's get in, and some were basically, what are we doing? And I thought that they were, again, some were really, really interesting. And thank you, Abraham. And I'm reading what Abraham's typed in here. So here's something to think about. And I pulled up a meta chart because I thought this would be kind of interesting and exciting to go through. Our entry point into meta was, boy, it was somewhere in the guess it would be helpful to know where I was going, huh? That is 3 years. We were in meta for 3 years. Well, I guess I don't have what I needed to have here, but it was interesting because the drop down to $88 to 112, this drop down, what would you call that? Out of curiosity, what would you call that drop down on Meta? And it's not a trick question, but some of you are going to say, huh? What would you call that drop down on Meta? Because it was pretty brutal. A bearish movement. Yeah, so that's true. Melting, that's true as well. But I'm looking for more. If you were in that, ooh, I love it. Dividend, no. I mean, that was a bearish movement where from $3.89 down to $88, I mean, it lost 80% of its value. So in real life, if you can protect with puts, that downward movement is your opportunity. One of the hardest things to do in any downward moving stock is to find an opportunity to buy it cheaper. Everyone knows you buy low and sell high, right? Well, if you got in at that 200 level, pretty awful when it's down at 88. Pretty awful, right? So if this is your opportunity, what would you call this movement back higher? If your opportunity is on the way down, what would you call the upward movement higher? And I'm just kind of, not that I'm making this up, this isn't a technical term, but your opportunity's on the way down. What's the move higher called? And if you don't know, you can type some question marks in. That's okay. A rebound from being drunk. There you go. Bullish. That's a good one too, but if your opportunity is on the way down, watch closely for a pullback. So the opportunity is on the way down. I'm going to tell you the movement back up. That's your reward. That's your profit. And when it comes down to it, I just find it interesting. Most people panic on the bearish opportunity for stocks. And plain and simple, the reason why most people panic is the time value or timeline to make money. It's difficult. I do kind of talk to people now that as it's going up, and people are like, we've got to get in. We should do this. We should do that. It's easy to get in when it's going up. Your opportunity is not when a stock is going up. Your opportunity is when that stock is going down. But our human nature, our fight or flight, most of us have that flight and we're out of there. Most people, dang it, that's ridiculously small. Most people want to get in on the bullish reward side. Which misses the bottom and sometimes the opportunity. And there's no way, in real life, there's no way where you just plan it. It doesn't exist. There is no just, hey, I'm going to plan it. Things are going to go the way I want to. We understand. We understand plain and simply, over and over and over again, that you can't time the market. I mean, plain and simple. I think I have this ready to go. It is impossible to time the market accurately. Not saying it can't be done for one-offs, but the market is stacked against us, right? So it is not really possible to time the market accurately. That's why we use those puts to allow us to make something on the way down so we can make more on the way back up. It's a process. For those who asked, what are we doing now? We already have bull call stock replacement strategies in place. And I found it interesting because a couple of you now, 4 of you, have actually asked about, hey, should we take the profit on the short 600 call side? And for a while, I'll be honest, I've struggled with it. I've really struggled with it because of how bad Meta's earnings were. So last week on Thursday, I did a trade findings and adjustments. Here's the YouTube video. The ultimate decision is no. We're not going to take off the short side because we get to keep the total credit no matter what. Yes, it would be nice to collect 60% of it. But no matter what, we get to keep that $50 of total credit. It's $5,000 for every one contract. As I was thinking about it, until Meta has better earnings, I want something to be able to protect our other positions, our stock replacement positions. So for that reason, my decision, because their earnings were so bad, was to keep those shorts in place to protect. Looking at a chart, most likely Meta is using its purchasing, its billions of dollars of stock buyback to level it out. But it would not surprise me to see it come back down to the 415, 440 level and test the bottom. And it does not seem to have the strength to move above the 50-day simple moving average. It would not surprise me to see Meta, and I think I've said this a couple times, come down and test the 420, 440 range before it can break 488. And I'm not sold, I'm actually not sold in any way, shape, or form that it's going to come back. It's more than fully valued. If we take a quick look at the Dow Jones Industrial Average, we're bullish again. Technically speaking, in a week, we crossed over, we crossed over. If you had your moving averages, it would have crossed over, but we broke above the 50-day simple moving average. Notice how we're stopping very close to a double top we had back in March. A sell-in may go away. I don't know if it's in the cards. It doesn't seem like it. Technically, we're bullish, but it would not surprise me to see us finish May and come right back down to the 38,000 level. All this is standard technical analysis. The S&P 500 in a week broke the 50-day, crossover, crossover. Williams percent R, overbought. It really would not surprise me when we're so close to the triple top here to seeing us head back down. Now, it is something that's interesting. We did get that 6.6, 6.7% pullback between that 5 and 9%, 3 and 7%, however you want to call it. We did get that pullback. We could see a next leg higher. But anyone know, what is that next leg higher dependent upon? What would that next leg higher be dependent upon for us to break out to new highs? All we're doing is putting some 2 and 2 things together, but what would that next high have to have? There you go, interest rates. Perfect. We're either getting an interest rate cut, or we're going to get much quicker than expected lowering of inflation. Personally, I don't think that's coming. The way I see it, usually oils and energies go up during summer. I don't see that changing. I don't see that going down lower. I hate California right now. The price of food and water in California is outrageous. It's unbelievable how high it is. At this time, I just don't see it. I don't see it. I don't think we're going to be, I don't see our markets moving much higher because of that. NASDAQ. Almost looks like it's building a base. Could be for a rebound higher, but build a base last time down. Again, we've got a quadruple, if not 5 times it's hitting that top. Are there enough buy orders to push it higher? Again, I just don't see it. I just don't see it. So for that reason, and I don't flip-flop a lot, but for that reason, when people asked me, where will the S&P end in May? I'm still saying down 2%. I might change that to flat next week. But I made the comment, where will our markets end this week? I said higher, but I said it was foolish. It was foolish for our markets to go higher. I'm now going to go down to, hey, we're going to go lower. Net net, our markets are probably going low over the next little while. All right, this is the, should switch it. This is the trade findings and adjustments for 05 last week. So this will give you the information on Meta and taking off that short. Earnings. We got BABA tomorrow. Baidu is not on the 9th. Baidu and Under Armour not on the 9th. I put the wrong date down. It is this Thursday, the 16th. So BABA tomorrow. Baidu and Under Armour before the market opens up on Thursday. Baidu numbers are usually released Wednesday evening. I did not check the briefing, but I'll put that in there for you guys. This is a week of inflation. Tomorrow, PPI and core PPI. It'll be better than last month, but it's not going down. For that reason, I'm not looking at putting protection on per se. We do have protection on Google, Disney, and Baidu. Baidu for its earnings, Google because it headed down technically, so we had 170s on. Disney at 114, we might take those off, but Disney hasn't inspired a lot of hope. And again, their earnings were not bad, but we've got 114 Disney long puts in place, very profitable. We're just looking for some better movement. Someone just asked, is there any hope for Under Armour? Yes, there is. Again, it's taking all the right steps. It just took a lot of wrong steps. And Under Armour could get to $9 very quickly. Very quickly, Under Armour could be at $9. And if it got to the $9, 12.5, 17.5, maybe we'll see it get back up to $27.50, but we'll see. All right. Kind of a loaded Wednesday and Thursday, but really it's the inflation numbers that matter. Everything else is going to be secondary. What about retail sales? Retail sales actually moved our markets last time they reported. Because of the CPIs, it takes a second place. It's going to be inflation that moves us higher. Protection in place is on Google L, Disney at 114, and Baidu at 110. Google L has protection at 170. Interesting article. Here's where the pros would invest $1 million right now. I disagree with it, but I did think this was somewhat interesting or funny. The only reason why I say that is because, well, people just don't learn. The 60-40 portfolio. Now is the good time for a 60-40 portfolio, which I just had to chuckle. I just had to chuckle because you're going to read through this. And again, diversification never was protection in market crashes. It's not. If you had $1 million to invest right now, fund managers are pushing a 60-40 portfolio that has failed the S&P historically by even less than half of the gains. Kevin, you can't say that. Work the numbers. If 60% of your portfolio is in stocks, then the other 40% is losing as those stocks go higher. If you have a crash in your stocks, the bonds are going up, except for 2 years ago when they both went down. Stocks lost 24.8%, bonds lost 50% or more. Please feel free to read through this, but understand what a joke it is. AI. If you're going to pick stocks, you need to be in AI stocks. Well, it's funny because they don't talk about it. 100% to stocks for the moderately aggressive. Oh, here's what we want to put you in. NVIDIA that's already moved, Supermicro that's already moved, Eli Lilly at all-time highs, and then they get into some more passive housing and energy stocks. What a joke. They kind of want to put you in stuff that's already moved. As I read through this article, I was shocked at the stupidity that some people fall into as that trap. I'm just shocked. Please read through it and make your own suggestions or thought processes here. But boy, again, absolutely shocked at what was presented. I couldn't believe that was even said as an opportunity. Okay, second article. Dwayne Wade talking about how to help a successful professional athlete not blow their money. It was because of the Caitlin Clark and what she was earning. But again, as I went through this, I found it pretty interesting of maybe how the other side views money. Just an article for you to look through and read. Inflation is slowing. Here's why prices still aren't going down. A great article that was sent to me. I think this very concisely goes through where inflation is not coming down and why. Again, a lot of it is on consumer spending, credit card debt, but do read through this if you're interested at all on the inflation. A very interesting article in that regard. With that said, are there any questions you guys have for me? Are there any questions today that I can answer for you? If I was to look at the market, I would think it's doing its cyclical rollover in May, sell in May and go away. Not that that's what always happens, but it seems like we're topping out at some points that we've hit in the past and we're unable to get above. And I'm not sure I see a bunch more buy orders in place to push us above simple moving averages, primarily the 50-day. Not to push us above, to keep us above the 50-day on historical downtrends. But are there any questions you guys have for me that I can answer? Anyone want to venture a question in there that I can try to do the best I can to get it answered for you? All right, so Adam, you're a little new, and so let me try to answer those questions in two parts. Have I ever put someone in a 60-40 portfolio? And the answer is no. The reason why is because 40% are in bonds, which means you can never beat the S&P 500 because bonds act inversely to stocks. So if you're trying to match or beat the S&P 500, you don't go into a 60-40 portfolio. That is more for people that are maybe retired that are trying to create some income that is tax-free through munis and treasury bonds and those kind of things. Also, I felt guilty if I put you into 40% into some type of bond fund even off of treasuries, I'll make a commission. And if you're looking at $1 million, $400,000, getting 3%, I'd make 12 grand off you just putting you into a fund that totally throws off any type of financial plan. The biggest problem with financial plans is that they go on compounding interest. A financial plan is a linear, and if I go ahead, I'm just going to drive it. Financial plan is a linear return that's based on compounding interest, even though the stock market goes like that. So plain and simple, I'm not doing 60/40s. I never have for people. And the premise is wrong if they need to beat or grow a portfolio. A 60/40 is more for someone in retirement. So coming up, what do? We use that long put. We use the long put to act like insurance on stock ownership, so we can make something on the way down. If we make up enough on the way down, then that gives us the opportunity to add more shares of stock for when things bounce back higher. So Adam, that's a great question. I hope I got that answered for you. Are there any other questions that you guys have? If not, I appreciate you guys being here. Thank you very much for showing up. Here we go. Reese, 60/40. Couldn't you accomplish the same thing with a good dividend stocks? Yes. A good dividend stock will not give you tax-free income, but yes, a dividend stock will throw out a dividend that you'll get taxed at a long-term capital gains rate, and it will still give you stock appreciation. So actually, you could probably accomplish what some people are trying to do with the 60/40 with the upside opportunity of the stock market and a lower tax on dividends than you would on a 60/40 bond fund. The advantage of the bond fund is being able to put some of those bonds into tax-free munis or treasuries. And there is a place for it. I mean, if you have millions and you want to keep your Medicaid, Medicare intact and those kind of things, then yes, there is a place for munis, treasury bonds in a portfolio. It just shouldn't be a blanket 60/40 when you're trying to grow your portfolio, especially right now. Yes, we could see some stocks run higher. We could see bonds run higher if interest rates go down. But a lot of people counted it this year, and guess what? Those bonds are just not helping people's out. Let's put it that way. All right, guys. Hey, appreciate you being here. Thank you for showing up. We'll get this posted as quickly as we can. Always appreciate you guys attending. Stay safe. Protect yourself going into the earnings. Hopefully, we'll see a really good run this week on Baidu and Under Armour, but we will be protected for each accordingly. Talk to you guys Thursday morning. Have a great day, and we'll talk to you soon. Bye-bye.